Hello and welcome to Startup Street. I'm Arundhati Ramnan, and these are the top headlines that we're tracking for you from the startup world. EV segment leader Ola Electric sees a sharp drop in market share in November as TVS and Bajaj Auto narrow the gap. Promoter Bhavish Agarwal pledges close to 4% of his shareholding in the company to raise debt funding for his artificial intelligence startup Krutrim. Fintech major PhonePe ends its partnership with SoftBank-backed payments platform JustPay. The firm told CNBC-TV18 that it will not be working with any third-party routing platform and will now offer all solutions to merchants through direct integration only. Dutch investor Prosus nearly doubles its profit in the first half of FY25, reports 26% top-line growth in its operations. Consolidated e-commerce revenue hits $3 billion. Prosus made gains of over $2 billion just from betting on Swiggy. Prosus pumps in $80 million and picked up more than 10% stake in Mintify, a supply chain financing startup. The fresh funding comes after Mintify raised $110 million in March 2023, led by Premji Invest. AI startup Pathway secures $10 million in a seed round led by TQ Ventures. Cadmos, Innovo, Market One Capital and ID4 also participated. Pathway aims to create live AI systems capable of complex reasoning. Swiggy expands its 10-minute food delivery offering Bolt to over 400 cities and towns across India. This includes Tier 2 and Tier 3 cities. The delivery radius for Bolt is limited to 2 kilometers as of now. Australia proposes a law that imposes $33 million fine on global tech companies if they suppress competition and prevent consumers from switching between services. Law to empower Australia's competition regulator to oversee compliance, investigate anti-competitive practices online and fine companies. Those were the headlines that we're tracking for you. But to the top story today, Prosus, the global investment group, has recorded a strong first half of FY25. The group's e-commerce revenue has hit the $3 billion mark. Prosus is also betting big on the India opportunity. Rachna Dhanrajani is here to give us the key highlights. Rachna?
Prosus has had a standout first half of the financial year with a 26% top-line growth in its operations. Consolidated e-commerce revenue hit $3 billion, while adjusted EBIT for the same soared fivefold to $181 million. The Swiggy IPO marked a major milestone, valuing the company at $11.3 billion. Prosus sold a part of its stake for $500 million. Although Swiggy's internal rate of return stood at a modest 7%, Prosus's other Indian investments, however, have delivered stronger IRRs. For example, Elastic Return is at 31%, Meesho at 32% and PayU at 30%. In the edtech space, Eruditus is a bright spot, delivering positive returns, unlike its global peers like Byju's, Stack Overflow and Skillsoft. Beyond this, Prosus is doubling down on its India potential. It recently invested $80 million in Mintify, a supply chain company, and $100 million in Vastu Housing Finance. Prosus CEO has emphasized that India has always been their priority well before the country gained the global attention. He called Swiggy's IPO just the first big result, signaling at many more successes ahead. Prosus has 30 more investments in India, of which about 5 go for an IPO in the next 1 year. This includes Meesho, PayU and Bluestone. With this momentum, Prosus is not only cementing its presence in India's startup ecosystem, but also paving a way for future standing strong. And this is despite being the year that it was, with Byju's being written off for a loss of about $493 million.
Right, Rachna, many thanks for those details. To the other big story today, EV segment leader Ola Electric has seen a sharp drop in market share in November as TVS and Bajaj Auto narrow the gap. According to Vahan data, the company's market share has fallen 500 basis points to 25% in the month of November. However, it still remains ahead of competition. Separately, Ola founder and promoter Bhavish Agarwal pledged 1.10% of Ola Electric's equity. This is about 3.65% of his stake in Ola. The shares have been pledged to raise debt funding for Ola's AI startup Krutrim. Agarwal held 30.02% of the company's total shares as of September 30th. On What's Brewing today, commercial electric vehicle leasing and asset management company Alt Mobility has secured $10 million in a Series A funding round led by European venture capital firm Eurozeo. The round also witnessed participation from its existing investors, Shell Ventures, Tinam Earth Fund and EV2 Ventures. The Delhi-based company had previously raised $6.45 million from its existing investors. Founded in 2021, Alt Mobility is a full-stack EV leasing platform offering mobility as a service for commercial vehicle users. It simplifies financing and provides reliable technology that supports the transition of intracity logistics to electric mobility, reducing carbon footprints and improving profitability. Joining us now to discuss this further is Dev Arora, the co-founder and CEO of Alt Mobility. Dev, thank you so much for taking time out and being here with us on Startup Street. You know, before we get to the fundraise, right, take us through the kind of growth you've seen for your platform and your new offerings like the leasing products for four-wheeler light commercial vehicles and cars and battery as a service model for second life vehicles. You know, what's the impact that you've created so far?
Right. So we've essentially been riding the EV wave that's hitting globally. And we've realized that commercial fleets are going to be the fastest to transition to electric. And India is leading that space with the 2- and 3-wheelers largely switching to electric. So it's been about 2.5 years since we started our first lease. And in those 2.5 years, we've deployed close to about 10,000 vehicles on the ground. This has been a combination of 2-wheelers, which are used for deliveries, 3-wheelers for cargo as well as passenger, 4-wheeler is cargo and passenger as well. Intercity and intracity is what we've been focusing on so far, and 100% of these fleets are electric. We've also realized a significant potential exists in the battery space where these vehicles will be entering into second life. So essentially providing leasing for batteries in their second life, looking at leasing of batteries for the e-rickshaw market as well is quite optimal time to look at this market.
Right, so India looking like an exciting market there for you. But, you know, you've raised this $10 million in funding. If you could sort of tell us where will the funds go? What's on top of the agenda?
So essentially, a lot of the capital will be used to scale up. From 10,000, we are looking at deploying close to about 30,000 vehicles in the next 12 to 18 months. That will translate to an AUM close to about 800 crores. Our capabilities will also be increased to going beyond just providing access to finance, but also looking at how we can provide aftermarket services. Which includes access to service and charging infrastructure, which will partner with third parties to work on and expand into these markets as well. Objective is to essentially create a turnkey service, which is a full stack leasing platform, which leverages the data that's coming from our asset management and essentially leverages that data to expand into multiple different types of services. The objective is to essentially create a hassle-free experience to go electric while removing these barriers, which are perceived to slow down the entire electrification process. We're also diversifying into going beyond just looking at the B2B segment to also now looking at the driver cum owner segment, which we are seeing is gaining mainstream market adoption across the different tier 1, 2, and 3 cities that we already operate in.
All right, so looking to make that pivot from just B2B to also B2C, you're also trying to drive profitable EV adoption across the value chain is what you've just explained to us, right? So if you could take us through the kind of clients you've tied up with to lease the vehicles on your fleet?
Certainly. So we started with the entire electrification in this segment started with the e-commerce companies promoting electric as a part of their sustainability goals. This was supported by government initiatives, which are subsidies and other incentives, state and center that exist. And this e-commerce companies were focusing on supporting B2B fleet operators, the likes of Magenta, Zip Electric, Fine, Fulfilly, and many other EV fleet operators were the first to adopt these vehicles. As the segment has more evolved, we're also seeing participation from traditional logistic companies now looking at electric as a way to save on costs. So electric is no longer about, the narrative no longer about going green. It's about how do you leverage electric to save on logistics costs, which are the differential between charging cost and the fuel cost is now about 40 to 50% of total operating costs. So that means a lot of traditional fleets are also getting included. And the mainstream market, or about 80% of the market, is actually small fleet operators and drivers. And that's a segment that's getting really excited now, while the last 2.5 years has been driven primarily by B2B fleets. We believe the next 2 to 3 years will be driven by small fleets and drivers. And that's a very interesting direction that the sector is taking.
Absolutely. And, you know, if you could take us through your revenues, right, and the targets for this year, and what's profitability looking like at this point?
We have been profitable since the first year of financial closing we've had, and we continue to be profitable every single year since we have started out. You know, we're managing an AUM close to about 200 crores now. The objective is to scale this AUM to about 800 crores. From a revenue standpoint, the company's generating about 30% of its AUM in the form of annually recurring revenue. So about 5-6 crores comes as an ARR. And this will be significantly increased as we add on more and more vehicles to the fleet. Moreover, we're also unlocking new business models that are going to keep adding to that revenue pile and increasing overall profitability for the company. Target is this financial year closing will be profitable once again.
Right, so you'll be profitable once again when you close this financial year. That's great to hear, but Dave, we're completely out of time. Thank you so much for taking time out and being here with us on Startup Street.
Pleasure. Thank you.
And moving on, ShopDeck, a direct-to-brand e-commerce enabler, has raised $8 million in a funding round led by Bessemer Venture Partners with participation from Elevation Capital, Venture Highway and Chirate Ventures. This capital will drive ShopDeck's mission to empower small and mid-sized businesses. Many of these are emerging brands exploring D2C for the first time to achieve profitability and scale and establish their online presence. Joining me now to discuss this further is Rishabh Verma, the co-founder of ShopDeck. Rishabh, thank you so much for taking time out and being here with us on the show. You know, like I just said, right, ShopDeck's mission is to empower these small and mid-sized businesses, many of which are doing this and exploring D2C for the first time. And, you know, they're trying to achieve profitability and also scale and establish their online presence. As we know, the D2C space across segments is highly competitive. So tell us how you're helping these brands.
Thank you for having me on the show. As you got it 100% spot on. We have millions of e-commerce merchants who get orders on e-commerce marketplaces like Amazon, Flipkart, and Meesho and Myntra. But if you look at the number of merchants who actually sell D2C, it's actually a very small percentage of that. And that's why we created ShopDeck, because our goal was simply to sort of help merchants sell on their D2C channel profitably. What we do is that we have an expert team of growth consultants who optimize marketing, website, shipping, and across the whole stack, and help them optimize at an order level, which is exactly what an Indian merchant wants.
Right. And, you know, you've raised this money to primarily pump it into your tech stack, right? AI is at the core of what you do. If you could take us through your tech edge and how else will you spend this money?
Yeah, that's 100% spot on. Our goal is to sort of invest in our software and ensure that a lot of these complex decision making, which is currently being done by people with limited information, merchants and brands don't understand how to sort of optimize their marketing, how to optimize their shipping, and how to look at their website data. And all of this leveraging AI can be done in a much better manner. So our goal is to effectively optimize full funnel and leverage AI to sort of ensure that we can democratize profitability even for a small merchant who's trying to sell on their own website.
Right. And you know, how many of these sellers are currently on your platform, and what is the impact that you've sort of created for them at this point? And also, you know, what is the potential that's there?
So we have 1,000+ brands selling on our platform. And, you know, the special thing about this is that none of these brands were actually selling D2C before they started working with us. And all of these brands have started from scratch. And we have examples of over 50+ brands who are selling products worth over 5 crores plus every year in just less than 2 years of starting, right? So the real impact that we're driving is that any merchant who's out there currently who is not in a position to set up their infrastructure to sell D2C can come work with us. And many of them can become successful if their products are something that consumers really want.
Right. And so what's your revenue model then? What are you currently clocking? And, you know, where do you hope to end this year?
So our revenue model is very unique. If you look at the whole ecosystem, you will have most software and marketing agencies charging you a fixed subscription or a retainer fees. We are the only one who charge completely on a net order delivered basis, which is that we are a fully success-based model, which means that if you don't succeed, you basically pay us nothing. And we charge something close to 3% of net revenues. We just filed our last year's filing with over 100 crores in total sales and are looking to grow on that number for the coming year.
And what about profitability?
So we have had few months of profitability, while our core focus right now is not profitability, but instead growth. So we are looking to sort of invest in making sure that we are putting the word out there and getting more and more brands to work with us. And so while our model is very sustainable, and that's why we've been able to raise capital, we are not necessarily focused on driving profitability, but instead to drive top line and growth for our merchants.
And so then how soon will you be focusing on profitability at this point?
So that's a good question. Our model is very, very sustainable, and so you had many months of profitability, and which is why we know that it's a switch that we can turn to sort of generate bottom lines when we want. But our focus is mostly to keep investing in software that helps our merchants' profitability, right? So as we scale to a much larger scale, which is when, and we're much closer to sort of hitting the public markets, is when our focus will shift towards profitability.
So when are you planning to hit the public markets then, since you've already brought that up?
Well, it's too early to comment about that yet. But of course, in the next 3 to 4 years is what would be a good time to sort of think about hitting public markets.
So 3 to 4 years is the timeline that you're looking at. But you kept saying that you want to scale your operations, right? So some of the funds that you've raised now will go into scaling your on-ground operations to support your sellers across tier 2 and tier 3 cities, right? So if you could take us through your current presence and the expansion plan that you have.
So our goal is to effectively become the de facto platform for anyone thinking of selling D2C, right? And with this fundraise is when we have come out of stealth, and is when merchants we are putting the word out there. Currently, we work with merchants across tier 2 and tier 3 cities, from Surat to Bareilly to Panipat, and in the south, Tirupur. We have multiple merchants across these cities, but of course, we are still very early in terms of our penetration. And as merchants are hearing about our model, more and more are sort of trying and experimenting with D2C and coming towards us, right? So that's the goal, to put in the word out there and to sort of get as many merchants who are excited about D2C to try out our platform.
All right. So putting the word out there so more people join your platform and you can help them scale and become profitable. But Rishabh, thank you so much for taking time out and being here with us on Startup Street. We wish you all the best on this journey going forward.
Thank you. Thanks a lot. Thanks a lot.
On that note, it is time for us to head into a short break. But coming up next, the 44th edition of the GITEX Global had placed artificial intelligence at the center of its agenda, showcasing the rapid evolution of AI and its impact on industries across the globe. A special report on the other side. Stay tuned. Welcome back. You're still with us on Startup Street. The 44th edition of the GITEX Global placed artificial intelligence at the center of its agenda. It showcased the rapid evolution of AI and its impact on industries across the globe. With over 6,500 exhibitors, 1,800 startups and 1,200 investors from 180 countries, this year's GITEX attracted more than 2 lakh visitors, its highest international turnout to date. My colleague Aishwarya Anand brings a special report from Dubai.
The UAE is leading the global AI race. In fact, the region is set to witness its largest ever economic impact, which is going to be led by AI, as artificial intelligence is going to contribute nearly 13.6% to the country's GDP by 2030. Within the UAE region, Dubai is the one that's spearheading AI initiatives. We are here at the 44th edition of GITEX Global, the world's largest startup and tech event, to understand what is so lucrative about Dubai that founders and VCs from across the world are coming to set their shop here.
The first startup we spoke to is Dyna AI, that comprises multiple large language models and text-to-speech models that are trained for financial institutions but are also applicable to other businesses.
We are offering the solution of taking all the communication channels, which might be text, voice, or avatar like we have here, and replace it the old-fashioned, which is operators or people in the branches. That creates like the one unique financial advisor to the customers, which has a brain and memory, so every single customer then can feel himself like a private banking customer, which banks then gaining better NPS.
You started in Singapore, but then you moved to the Middle East. I mean, I want to understand that what is it about UAE that is attracting a lot of startups to come to the market?
Singapore and Dubai are very similar environments, very friendly to the development, very friendly to the AI. Middle East, there's a lot of English and Arabic, so that's pretty much like we selected the places where there is the biggest nations or biggest largest used languages in the world.
One of the startups that we're speaking to in Dubai is Tendered, which is an AI-powered analytics platform for fleet management. Now, this company, which has been backed by the likes of Peter Thiel, is helping companies operating in heavy industries like construction, among many others, to track their equipment details, to reduce carbon emission and help them prevent breakdowns through maintenance alerts. And they're doing it all by providing them AI-driven data insights.
From day one, we were installing sensors and providing it for free for all the equipment we were renting out. As the marketplace business grew, I realized the offering I have is not very differentiated. By pivoting into pure software, we were able to build a lot of proprietary information that helped companies make better decisions. And this information never existed before. So from a equipment provider, we became a data creator.
You started your business in the Silicon Valley. What led you to set up in UAE?
The US is a much larger construction market. You have about almost $300,000 worth of construction per square mile. Whereas in the UAE, it's a much smaller market, but it's very dense. You have about $3 million worth of construction per square mile. So when you're a smaller company, you want to work in a dense environment. So we picked this region to start. But we are leveraging the density here to acquire as much customers with the resources we have to then expand into new markets. And India, with the way it's growing and the industry and the adoption of technology, is definitely in our horizons.
The business and startup ecosystem in Dubai boasts a population that is 90% foreign. To foster innovation further, the Dubai International Financial Center has built a Dubai AI and Web3 campus, the largest cluster of artificial intelligence and tech companies in the MENA region.
We're north of 100 startups. I think we're way ahead of our targets that we set for ourselves, which was about 75 companies by the end of this year. We aim to have about 500 startups by 2028.
In respect to the Dubai AI campus, DIFC, in the fintech space, how many startups have you, Indian startups have you incubated? And with AI, what's the plan there?
India is one of our major markets when it comes to attracting companies across sectors, not only fintech, and same goes for AI. There's a lot of talent that resides there. So we want to tell them about the Dubai AI campus and how they can be partners of it and how they can actually work with us in addressing specific pain points of the industry.
Sovereign wealth funds in Dubai are trying to woo AI investors to set up shop in the UAE and add to its investment in AI, which exceeds more than $10 billion over the last decade.
If you look at what AI is most useful for, or most useful in, it's in domains where you have volume of data, where you have the velocity of data, so you're able to access the data very quickly, and you have the variety of data, so diversity. There is no place on earth that has a variety of the populace that we have. We have 200 nationalities, so this means that any AI system that is deployed here becomes global first rather than local.
Running concurrently with GITEX Global is Expand North Star, which is built to be the world's biggest startup and investment show. This year, the event claims to have attracted 65 unicorns with a combined valuation of $400 billion. Not only that, investors with $1.2 trillion in assets under management like Bessemer Ventures and Lightrock have also participated at the event. Now, with GITEX Global and Expand North Star, UAE is aiming to fuel the global artificial intelligence economy, which is set to hit a valuation of over $600 billion by 2024. With camera person Balbir Singh, in Dubai, Aishwarya Anand for CNBC-TV18.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.